Should I sell my stocks to pay off my car loan? I thought this would be a pretty interesting post from r/personal finance. I'm 23, making about $44,000 a year. I'm about to be promoted and will start making $50,000 a year. Hey, props to you. I roughly get about $2,600 a month after taxes. 60% of it goes to bills such as rent, car insurance, car payment, food, etc. The 40% I have goes to whatever else. Basically, I'm spending about $1,500 a month on bills. My car payment alone is $450 a month, 8% interest on a $25,000 car. I currently have 26K in stocks after losing 20K in gambling like an idiot. Oof, literally. So, I'll put it this way. If I was in this individual's situation personally, what I would do is I would sell off that car. Well, not I would not sell off the car, but basically I would actually take the. Because I'm guessing these stocks are actually individual stocks. That's what I'm assuming. So if that's the case, I would probably just liquidate the stocks and pay off the car. Because the reality is, you're still going to need a car to go to work and do the things that you need to go and do. Like that is the reality of the situation. So it's either you do that, have the car that you already have, right, with just no more payments really, and then basically you have extra money that's freed up that if you want to, you can start focusing on putting money into like index funds like the S&P 500, etc. Like that's the way that I would probably go about it because also it just lowers your monthly cost of living by a massive amount, right? So that's what I would probably do in this situation because like the car is not really out of line because he's about to be making $50,000 a year. So I would definitely sell the stock off, pay off the car, and then start putting money towards investments after I build up like an emergency fund. That's what I would probably do. But let's see some of these comments on here. So this person says, "I'm not as quick as folks around here to say sell the car. I think people ignore that selling a car, especially for a significantly cheaper one, has other implications, and you're often going to lose a decent chunk of money in the process. Now, depending on the circumstances, that chunk may be much smaller than the loss you're looking at from a bad decision, but I don't think this is catastrophic. Even if you lost 20k gambling, it means that 23 on a modest income, you had $46,000 saved at one point. That suggests some degree of responsibility assuming you earned those funds. I would probably look for other places to save money. If this was a new or relatively new car, I would drop the extended warranty, make sure you're not doing something dumb like paying for gap insurance through the dealer. Then, most importantly, if that 6k per year raise comes through, change nothing else about how you're living. Put that 6k towards the car, as much of it as possible. And if you do that, plus keep making your original payment, you'll get out from being underwater pretty quick, which opens up options, and you'll potentially have that car paid off in just a few years when it still has plenty of low maintenance time left on it. 8% isn't amazing if your credit situation improves, or you hear things on the news about rates dropping. See about refinancing. Yeah. See, this person says, I completely agree. There's a huge difference between should have bought a cheaper car and needs to sell this car and replace it with a cheaper one. And besides, his question was not should I sell my car, but should I sell my stocks? Somewhere in the comments, Ob said that he could refinance the loan down to 4.6%, which is a pretty great loan considering current market rates and historic long range performance of stocks, which is no guarantee of future returns, is about 9%. So to answer Ob's question, refinance the car loan and hold onto the stocks. That's what one person says. But again, if I was in this individual situation and my specific purpose was should I sell my stocks to pay off my car loan, I would. I would definitely do that. Me personally, I would sell my stocks to pay off my car loan to free up the monthly amount of excess cash that I have to utilize for whatever I want every single month. Because you got to keep in mind, right? $450 a month every single month really puts like a weight, a burden on your budget. Imagine if you just freed up an extra $450 a month. What would you do with that extra money? How much could you breathe now that you have that extra money? Like that's what people need to kind of like think about. Like just imagine that. And this is why we also push people to get out of debt as soon as possible, as fast as possible, because it just frees up the cash flow that's coming in, right? If you have like $1,000 in like debt payments every single month and you get rid of that, now you have $1,000 that you can pretty much utilize to whatever, right? And that's the thing. Like to me, in my mind, I love waking up not being stressed about money being tight, right? And I would hope other people want to get to that point where they don't have to wake up every day worrying about if they have enough cash flow coming in to pay for groceries, to pay for their utility bills, that sort of thing. Like, I don't want anyone to feel like they're stressed out about that. And if you have an option where you were basically living paycheck to paycheck and now you're not, right? I would choose the option of now you're not. Because a lot of people may not think that this is like that big of a deal, but $450 a month is a pretty big thing. Like, depending on some compound interest calculators and all that kind of stuff, right? You could be investing like $300 a month into like the S&P 500 and have all the dividends reinvested back into buying more into the S&P 500. And by the time that you're like 60, 65, you could be worth over $1 million just in that one account, right? Not to mention any other sort of investments that you did, not counting any sort of like real estate that you might buy, increases of income at all, like just the $300 a month. So, pretty much the way that I view it, one, you can free up cash flow like crazy, and you have the option to choose to invest towards your future so that instead of making these car companies richer, you are making yourself richer. I like that viewpoint way better. I like the idea of becoming richer rather than allowing these massive corporations to get richer because I'm giving them money every single month. That's just the way that I view it. Feel free to give your thoughts.